Welcome to the Swing Trading with Cycles channel. It is January 20th. We're going to do our update on natural gas, and there was a video last night, so definitely take a look at that. As always, there will be a pinned comment that will have links to all of the natural gas videos and the other sort of asset classes that we cover on this channel. If you're new to this channel, welcome. We focus on trends on this channel. We use price action to analyze those trends, and that's because prices trend. That's what they do. And here we'll just start with a seasonality chart. And I just said we focus on trend, price trend. This is just giving us a sense of what things have looked like, in this case, over the last 16 years for UNG as a proxy for natural gas. And you can see the standout month is April by far. And really January and February are one of the worst months. I mean, not as bad as July, it seems. Now, you definitely take this with a huge grain of salt. It's all you want to focus on the price action to understand what the trend is at the moment. But just that's good context, right? And then if you look at Boyle, which is obviously a super leveraged ETF, so it's been sort of down only for the most part. Still, same pattern, April, really big standout month. And you can see, again, January and February, not so great. I mean, February especially bad. All that to say, if we are seeing price action that's really weak over the next few months, that would make sense sort of seasonally. And we could see a world where we do get a bottom somewhere around the late March, early April kind of time period. So with that, let's jump into it. Natural gas is trying to bounce today. And so we are on day 30, which is what we talked about in the video last night, because it was overnight action that we were looking at. At the time, we were trading, just you can see, right? Like by virtue of we know how candles work. Right, like this candle opened right here, right, and so it was just kind of hovering around the lows at the time that we recorded, and of course it did break to new lows. We can see from this wick. So now your low tick is 3.11, right, and so getting closer and closer to just $3 even, right. We're now into that no man's land again that we talked about, beneath $3.18 and somewhere above $2.38. Obviously, we're a long ways above $2.38 for now. So this is trying to bounce here. What it needs to do, I hope now, like if you've been watching this channel, I hope you can look at the chart and see this yourself. We need to get above this pivot here first, this high, which is 3.396. And we are here at 3.310, right? And so we need to, so I'll just kind of draw a line there. So call it right there, right? And you can see we came very close. We came within a whisker and then kind of pulled back. The other thing that you want to observe is this blue line is the 10-day moving average. It's always the 10-period moving average on any chart that you'll see on this channel. And we have not closed at the 10-day moving average since this breakdown on December 19th. So it's now been basically an entire month. At some point, we're going to close back above the 10-period moving average. I guarantee that, just by virtue of the way price action works, right? It has to bounce, even if we're going significantly lower. In fact, especially if we're going significantly lower, it has to bounce, right? Right? Like it's almost like the lower we're going to go, the higher we bounce to some degree, right? And so that gives you a nice little rule of thumb. So like, let's just see, just right now, the 10-day moving average is at 3.551, right? So a good distance from where we are. And also just keep in mind, it's moving lower every day because the price action is. And that's part of the reason why it will close at some point at or above it, because it's literally coming down as price is coming down. It's a short-term average, and so at some point price is going to bounce high enough. It's going to make enough higher highs, I guess, to be clear. Like for instance, this was a series where price tried to make a little higher high and then just like faded, right? You see. So it got close to the 10-day moving average, but not quite there. And again, there's nothing magical about the average itself. It's the kind of the concept, right? That like in a downtrend, we're going to make lower highs, and at some point, those lower highs are going to cross above that. So that gives you a little bit of a measure of the potential upside. And I'm going to talk about a trade I took on Boyle. We'll take a look at it. I mean, stops are set. There's no reason. I see we're going down to 10.11 now. So we're making new lows for the day. That's excellent for Boyle. And you can see that makes sense because we're pulling back here on natural gas itself. This is a daily candle, creating a bit of a doji. And so if this is not the bottom, it's coming at some point. Because again, this is already day 30. The last one actually ended exactly on day 30, but there's no magical thing about that specific number. It's just generally these things always come to an end, and 30 days is already getting long in the tooth. The one before that was 31, right? We did have this one that was 37. I mean, look at that decline. I mean, even that was 37 was only a 17-day decline. So we rallied for 20 days and declined for 17 days. In this case, we've been declining for 25 days. I mean, geez. That's which again tells you there's going to be a violent snapback. It's really just going to be a question of, is it like the final bottom, which for that we could think about the weekly chart. So let's talk about that levels for next week. Really important. You see these lines that are drawn? These lines were drawn because, and this is the previous week, obviously, the candle, is because this is where we want, like this is where this weekly candle was going to open, and those were the important levels to watch. So it was a low of 3.384. We're obviously lower than 3.384, so we broke to the downside of the range. We did have this little pop up, we tried, but we ultimately broke to the downside of the range. And so it's not rocket science, right? Like that's why I think I simplicity, consistency, right? What's the next range that we want to observe, right? It's this week's, right? Same idea. Obviously, notice that range is now lower because by definition we are in a downtrend, and because of this like doji kind of action, and we closed today, right? Like this candle will be closed, so you expect we're gonna open like somewhere like here. So we'll open on the lower end of the range, but that range is going to be a high of 3.789 and a low of 3.11. That bottom tick that we made earlier. So that's what we're going to want to watch. And like this decline, like if you kind of think about this whole thing as one decline, is getting long in the tooth as well, because we rallied for 7 weeks and we've essentially declined for, wait, what is that? So that's 9 plus 12, so 21 weeks. Yikes. So it's the same way the daily cycle is stretched. This is stretched as well. And also, as we noted in previous videos, this yellow line is always a 200 period moving average. And so here we find ourselves with price closing below the 200-week moving average last week, and now it's going to most certainly close this week below it as well. That's just like just a sense of like we are going to probably be in this kind of mire for a little bit. That doesn't mean there can't be some counter trend bounces that can make a good you can make a quick buck, but it does seem like the move is lower for longer, if you as it were. And we looked at those the seasonal charts. You could see a world where, right, like we get that bounce that bounce that's going to produce the crazy returns that everyone is sort of waiting for, anticipating, right? Like let's say we end this cycle on like week 30 and then we start a new one. Yeah. So that's the thing. I guess you could see a world where this weekly cycle just kind of stretches out, right, to like 35 weeks, because you have this one that was 40, right? I mean, this was bullish in that case. But so it'll all start obviously with this daily cycle low, right? When does that finally print, so that we can understand, is that also a weekly cycle low? Is it a longer term low? But obviously, again, the place to start are those levels for next week. And if we go to the monthly chart before we move on to Boyle, you can see we talked about this zone, and notice little tiny wick into that zone and then bounce. That's the move to 3.11. So now it's a question of, are we going to really fall into this zone? It would seem like we are, and again, another milestone. We're most certainly going to close the month of January below the 50-month moving average, which for reference sits at 3.705 right now. right? So a pretty good distance up. And again, think about this again from a cycles perspective. This is the declining phase. This was the advancing phase. So lasted 26 weeks, 26 months, excuse me, advancing, and now we've been declining for about 5 months. So we could be in this for a little bit longer, for sure. Let's look at Boyle. We'll kind of talk about the trade. So it's now kind of rolling over to new lows. We'll look at the 5-minute chart. So this is our sort of 5-minute opening candle. And as I said, I got in at 10:15, and you can see the low for this candle is 10:07, right? And if you go below that, you're probably gonna find yourself down here, right? Like decently below, let's say, decently below $10, so like in the 980 range. And so my stop is probably going to get triggered actually, because it's set right below $10. And so what may end up happening is we get some kind of false breakdown, right? Like that this kind of fills in and then kind of rebounds. We'll see. I think ultimately this is a good kind of indication of how deeply weak this thing is, right? Like every bounce is getting just like sold. But it's also a great example of a reward to risk that makes sense, right? Like that kind of downside, right? Like 16, 17 cents for potentially what you're kind of playing for here is up to like really the top end of this range potentially. Like 1160 is what I was really thinking. So like risking 16 cents for almost $1.45, right? And so we'll see what happens, how we play out for the rest of the day. It is 12:46, and so a lot can happen before we close for today. But again, we are so deep in the daily cycle that now is the time to start to take these little bets with small size and well-defined kind of risk reward. There it is. I have been stopped out. Awesome. So that's okay though, right? Like that's worth it. And at some point we're going to get a furious bounce, right? So let's look at the daily chart, right? So as I tweeted about, you could see this move here was like 24%, I think it was, right? This move here was like 27%. And so, yeah, you can see this pretty clear. As you're looking at this, like on the daily chart, this is turned into a very bearish candle. And in fact, the target, like this is turning into a bearish outside candle, right? So a move below the low of yesterday, $9.77. We'll see. Maybe a false breakdown materializes around that area, right? Where like it reverses. Because again, this thing has been more choppy than anything else, where it's trappy, right? You think, oh, it's going lower. Yet at the same time, we found ourselves much closer to 3, and we're closer to like 340. So the bias is to the downside. So you do want to be careful. Yet at the same time, again, it's just tough to kind of shorten the hole here a little bit. So if we think about the levels for next week, let's look at the weekly chart. So again, same kind of idea. In this case, this is making new lows as we speak. So we're going to have to see where the low is for today/the week. And then that'll give us a sense of, the sort of range. But the high was 1168. And so again, you want to be careful with this thing. This could be $5 by middle of next week, no problem, right? Like it'll just keep going lower. And at some point, I think they'll do some kind of reverse split as it goes lower, like to prop up the price sort of thing, because these things just naturally go lower and lower and lower. So that's Boyle. Let's look at the levels for U and G, like what that weekly situation is looking like. So again, same idea. And for UNG, the high is at 1179. And of course, we're also making new lows for the day here. But right now, the low is 1047. So that's like $1.25, something like that, right? In terms of like your sort of range for next week. And again, like for UNG, that like just for reference, that like 250, 40 level reference for nat gas would probably get you down to like $8, right? Which is important because that essentially, to be clear, that gets you down to all-time lows. Whereas $2.40 is certainly not the all-time low for nat gas itself. All that to say, these products are very risky, right? And so you want to be careful. Again, you want to be really careful trading these. You should really always have a stop on these things. Always define your risk. And so that's nat gas, and you can see the level pretty clearly on the if we turn this into a monthly chart. You can see just kind of seeking out those pivots. So that's UNG, and if we look at cold, which should be rallying now a little bit, except again, trappy moves, not a ton of follow through. Let's kind of see what this is looking like, right? So if we look at the daily chart, right, this is where we left off yesterday, right? So your next kind of obvious sort of pivot, that's an interesting, yeah. So if you're sort of playing for keeps, it would be in this sort of $70 area. You can kind of see sort of blue sky. And if we look at a weekly chart, like monthly chart, that probably makes it sort of more clear, right? Because 70 would get you back to like there, or that's 65, right? Well, this cluster looks kind of important, right? Yeah, because price came down here and then bounced pretty hard here, right? So you could see, oh, that's interesting. Now, that's the thing about these leveraged ETFs. It's hard to say exactly what the correlation will be to the price, but it kind of gives you a sense of like a quote-unquote greedy target, if you will. But we'd have to see, obviously, that's in a scenario where nat gas is going closer to that 238 level that we talked about. So I think that about covers it for today. We'll see how we finish trading. Again, this thing is kind of going back and forth. So although we're going green, or excuse me, we're going, we're certainly, this is natural gas itself, certainly looks like we're trying to go red. Who knows? We may end up having a little bit of a rally into the close, and this just kind of fills out a little bit. But the order of the day, and really with this whole thing, is patience. This thing is going to rebound again at some point. And if I'll close out. I'll just kind of look at, just for reference, that's your 50-day moving average in teal, right? That's all the way at $5.50. And that's your 200-day moving average. That's up at $7. And now at some point, we're going to get that, the bearish crossovers, etc. Well, actually, excuse me, I misspeak. The 10-day moving average is already crossed over bearishly, right? Like it's crossed over the 200-day and it's crossed over the 50. That makes sense. And the 50 has already crossed below the 200. So at some point, it's really now a question of how long does this decline, like how deep does this decline last in terms of how far below our 200-day moving average we stay, right? Like, let's see. Like right now, it's like, wow. Yeah. Right, because if it's at $7 and we're down here at less than $3.50, yeah, wow. That's and that gap is going to close at some point. And, probably not going to happen anytime soon. And again, that's why patience is a virtue. So we'll leave it at that. Thank you for watching.